Well, good afternoon and welcome to this afternoon session titled The Inclusive Funds, Secondary Capital, and TA Technical Assistance. My name is Ahmed Campbell, and I am the Director of Lending Development at Inclusiv, and I'm so honored to moderate today's conversation. Before I introduce our panelists, I'd like to cover a few housekeeping matters. I just would like to please ask that you leave your camera on so that we can see you during the session. Also, a quick reminder that this session is being recorded and it will be made available with all the conference material to all registrants. My colleagues Elsa and Pavan will be monitoring the chat box, so feel free to put your comments, thoughts, ideas, and questions there throughout this session. We will also afford time later in the session for general question and answer. So, at this time, just want to run through our agenda, what we're looking to cover today. I want to share with you just a quick audience poll so we can just test the temperature of the room, provide you with an overview of inclusive secondary capital, and then we'll discuss in greater detail the Racial Equity and Resilience Fund, our Southern Equity Fund, and then a facilitated discussion where we not only want to hear from our panelists, but also from you, our guest. So at this time, I would like to introduce our panelists. Joining us today is Sheilah Montgomery, the Chief Executive Officer and President of Florida A&M University Federal Credit Union in Tallahassee, Florida. She is a strategist, communicator, partnership builder, and transformational change leader. For over 4 decades, Sheilah has been advancing the mission of the credit union movement while increasing the economic viability of individuals, businesses, communities. She's dedicated her career to helping credit union boards, management, and staff provide excellent products and services to every member, regardless of their economic background. Sheilah is a certified chief executive, credit union development educator, as well as an international ICUDE, and is the president and CEO of the Florida A&M Federal Credit Union in Tallahassee. Sheilah, would you just like to share a quick greeting?
Good afternoon, everyone. It's such a pleasure to be here. I'd like to thank Inclusiv for inviting me to participate in this great session. Look forward to the panelists and for the lively discussions.
Thank you, Sheilah. Also joining us today, we have Tracey Jackson. Tracey is the Chief Financial Officer for Resource One Credit Union in Dallas, Texas. She oversees all aspects of the institution's financial functions and is responsible for financial stability, planning and statements, cost analysis, budgeting, general ledger integrity, and cost control systems. Jackson worked at Delaware State Federal Credit Union, where she served as their Chief Financial Officer for 2 years. Prior to her time at Delaware State, Jackson also worked for Atlantic Federal Credit Union, Financial Federal Credit Union, and MECU, our friends in Baltimore. I would like to take, actually at this moment, I would just like to ask Tracey if you can just share some greetings with the audience.
Good afternoon, everyone. Like Ms. Sheilah, I'm excited to be here and I'm honored to be a part of this conversation. It's a great topic, something that's near and dear to what we do in our credit union movement. And I'm actually pretty honored to be on the panel with Sheilah Montgomery because I've always watched her speak over the years. So to be next to her, even if it's virtually, is great. So thank you.
You're welcome. And my sentiments exactly. I've got a power panel going on right now. So yeah, all the excitement. If you can't see it through this virtual screen, it's absolutely here. So before we dive right into the meat of the matter, I would like to just take an opportunity to poll our audience so we have a better idea of your experience, and your understanding, as well as challenges with secondary capital. So if we can go ahead and launch the poll. Okay, so the first question that we have for you, is your credit union eligible for secondary capital? We'll just take a few moments for those of you who are on just to provide us with. And this is getting to the best of your knowledge, and all you're getting, good understanding. So this is not going to be a graded poll or quiz. We just want to make sure that we are as informative as possible. Okay, so it looks like we have about 60% of our audience who is eligible, 8% that is that says actually they are not, but we can talk about that and figure out how we can actually get you to that space. And 33% is unsure. So we will be covering secondary capital eligibility as we go through this particular session. So the next question that I'd like to pose to you, is your credit union considering secondary capital, but concerned about how to best leverage that secondary capital? And going to allow just a little bit more time for everyone to get their responses in. It looks like we have a pretty decent response, so let me go ahead and end this poll and share these results with you. So 58%, yes, are considering secondary capital, but concerned about the big question in the room is how to best leverage that. We hope to cover that with you as well as we get the real examples from both FAMU and Resource One. So our last poll question, has your credit union borrowed secondary capital? Because clearly we know that secondary capital has so many nuances, and as to whether you have already borrowed secondary capital and had that investment certainly makes a substantial difference to how your approach would be if this would be your first time applying for secondary capital. Okay, I think we got a pretty decent response, and to share these results with you. So we do have a few borrowers that are actually in the audience, but the majority of you have never borrowed secondary capital. So again, I believe that what we share with you today will be very informative to you, at least in helping you craft what your approach should be to the considerations for secondary capital. So before we get into, so much of this in terms of like how do we leverage it, I just thought it would be important to really start at the basics, at the foundations. And for those of you who are already familiar with secondary capital, this will simply be a refresher. But secondary capital, it's a capital resource for low-income designated credit unions. It's a loan. It's subordinated debt that counts towards your credit union's regulatory net worth calculations. And it's counted as debt for GAAP purposes, but it's also as equity for the purposes of calculating your net worth until 5 years before its maturity. So as you can see in this graph, in the last 5 years of its term, and in this example, it's a 10-year term, it's counted at 80, 60, 40, 20, and 0 of par value, respectively. And this information is also contained within NCUA Rules and Regs 701.34. That's a particular reg that I want you all to make a note of. You're going to want to be as familiar as possible with that regulation as you consider secondary capital. So, inclusive secondary capital. I think even before we really look at that, you want to really understand the mission. Inclusive's mission is to provide credit unions with capital to advance the mission of financial inclusion. We raise capital in order to make investments into credit unions like yours that help to expand the community development initiatives. And the purpose of inclusive capital is to provide capital to strengthen the capacity of CDCUs and furthering Inclusive's overarching mission of helping low and moderate income individuals and communities achieve financial independence. And we do this through the following formula of raising capital to make the investment into your credit union so that you might expand your CDCU initiatives. And with more than 200 million invested in CDCUs to date, and this is through deposits as well as our secondary capital offerings. Now I want to speak about eligibility because that was one of the questions, perhaps not sure if you did qualify for it. A credit union must have that low income designation in order to be eligible for secondary capital. And you also must submit and receive approval of a secondary capital plan by your NCUA regional director. If you are state chartered, then your state supervisor will also have to play a role in the approval of that secondary capital. The borrowing limits, according to Section 1079 of the Credit Union Act, is that pretty much caps out a credit union to be able to borrow less than 50% of a credit union's paid in and unimpaired capital and surplus. So let's jump right into some of the common uses for secondary capital. Secondary capital, it can be used to expand community impact and services to underserved communities, the innovation and scaling of loan products and development services that are designed for low-income and marginalized communities. The secondary capital can also help you increase engagement of the unbanked and underbanked communities you serve, allowing you to integrate community development initiatives into much larger strategies. Now, Inclusiv offers two types of secondary capital. We have secondary capital 1, which is a balloon repayment, as well as secondary capital 2. It's an amortized repayment. I'll just point out to you the distinction between 1.0 and 2.0. Not only is one balloon and secondary capital 2 an amortizing, but to qualify for secondary capital 2, a credit union must have a composite CAMEL of 1 or 2 for the amortizing portion. So credit unions will need to do a self-assessment prior to applying. Secondary capital 1 borrowers, while they are also encouraged to repay the amortized portions, they are expected to make a balloon repayment at maturity. And as I mentioned, it's counted as debt for GAAP, but as equity for the purpose of calculating your net worth. So what you have before you here are Inclusiv's offering. We have a maximum amount of up to $750,000 with rates as low as 2%. And we'll talk more about that. In addition, our secondary capital, we can make investments up to $2 million, again, with rates as low as 2%. And then our Southern Equity Fund, which I'll talk more about through this process, so that you get a really good idea of how your credit union can actually leverage this. So to provide your credit union with a very high-level overview of the secondary capital application process, it entails developing the long-term strategy for the use of secondary capital, applying and securing the funding, and the submission of your secondary capital plan to the NCUA for approval, followed by the closing and funding, and finally, the most important aspect of this process is execution. I'll reiterate to visit the NCUA Regs 701.34 again, so that your credit union has a really good handle as to the requirements of a secondary capital plan. So I'd like to really share with you about Inclusiv's Racial Equity and Resilience Fund. Earlier this year, Inclusiv announced the launch of a $20 million Racial Equity and Resilience Investment Fund that would deploy secondary capital to expand economic relief and financial inclusion for credit unions that serve communities of color. Secondary capital builds institutional net worth, enabling credit unions to leverage deposits and vastly expand impact. This pool will leverage more than $200 million in lending to minority-owned businesses, homeowners, and consumers to withstand the current economic crisis and build wealth and assets. The Inclusiv Racial Equity and Resilience Fund is made possible through support from the Robert Wood Johnson Foundation. And the Racial Equity and Resilience Investment Fund will build upon the highly successful Inclusiv Resilience Grant Fund, which was launched in June of 2020, that has raised more than $1 million in grant funds to support 59 minority designated credit unions around the country. And these funds are supporting credit unions to provide emergency relief loans, expand their outreach to minority businesses, to get connected with capital, and to reach unbanked and underbanked consumers with access to responsible financial services. As our Inclusiv CEO, Kathy Mann, commented, that community development credit unions have been on the front lines working to secure financial security for their members and communities. Minority credit unions are frequently the sole source of responsible capital in communities of color. So through the Resilience Grant Fund launched in June of 2020 to support credit unions serving communities of color that have been disproportionately affected by the coronavirus pandemic and marginalized because of race, ethnicity, or immigration status, Inclusiv is providing technical assistance to minority credit unions that are led by and serving people of color that are under 100 million in assets, and is part of Inclusiv's $25 million campaign to raise capital to address the racial wealth gap and to support communities of color. As you see here, River City Federal Credit Union in San Antonio, Texas, was the recipient of the first Resilient Investment Fund of Secondary Capital Loan. And Inclusiv's investment is supporting River City Federal Credit Union to expand their banking and lending to Latinx and immigrant communities in San Antonio. They're just under $117 million in assets, and they have just under 12,000 members and have extended over 101.4 million in loans. And just a little backstory about San Antonio. It's one of the fastest growing cities in Texas, but it is also home to high concentrations of predatory financial firms that target financially vulnerable consumers, especially newly arrived immigrants. And as a CDFI, MDI, and Juntos Avanzamos designated credit union, River City has worked with community partners in designing a suite of products for the unbanked and the credit invisible. And just to point out to you, an analysis that was conducted by Inclusiv on the impact of secondary capital investments found that credit unions receiving these investments leverage this capital 60 times over in a period of 5 years. The growth of CDCU, CDFI, and minority credit unions multiplies impact as each step up in scale is accompanied by dramatic increases in loan deployment, the number of product lines, and volume of specialized lending. And this vast potential has massive implications for changing the financial landscape for survival through the pandemic and growth for generations to come. Now, FAMU is a recipient of technical assistance through the Resilience Grant Fund, receiving strategic planning development, as well as financial projection support. And Sheilah, I'd like to get your insights on how the Resilience Grant Fund has helped FAMU in its quest to accomplish your credit union's mission and objectives.
Thank you, Ahmed. This is, again, one of the things that I love about Inclusiv. And we, as a small credit union under the $30 million mark, we're always looking for great partners. But I'd like to start with a quote from Glenn Harris. He's the president of, excuse me, Race Forward and the publisher of Color Lines. And I quote, "Racial equity is about applying justice and a little bit of common sense to a system that's been out of balance. When a system is out of balance, people of color feel the impact most acutely. But to be clear, an imbalanced system makes all of us pay." And I wanted to take the time to share that because while it's quite difficult to solve all racial equity challenges, it is gratifying to know that there is enough need to go around to do something. And I'd like to repeat that. There is enough need to go around to do something. We are very, very appreciative that Inclusiv has provided an avenue for this little small credit union to be a part of the solution. The opportunity to sit and hear an objective view of how we can move forward. I'll tell you about small credit unions. You get in a rut sometimes and you do the same thing over and over again. Having the opportunity to talk with someone about strategically, what do you plan to do? It's very important and it was very exhilarating. And then just fast forward that on to being able to project, okay, if we're going to do this, how are we going to pay for it? How are we going to make it sustainable? Having the opportunity to use those resilience funds to push that agenda for us has been kind of a calming thing for us because we are only as big as our opportunities. But I will tell you this, because of those resilience funds and because we were able to get that technical assistance, we were able to go to our county and say to them, we have the capacity to serve small businesses. Now, we could have gone to any area to decide how we wanted to give back to our communities. But we know for a fact that women and minority-owned businesses have less access to capital, and they are so mistrusting of financial institutions. With this jumpstart for us, we were able to get $1 million to start our micro lending program from the county. Now, I believe in collaborations because no man is an island. But I also understand that if we don't sit at the table and talk about what we know that is true, then we've missed the mark. So credit unions have a prominent opportunity to be there to let people know that, I hate to say it, but I'm gonna say it again, people helping people. That's what we do. Now, I really like the fact that our collaborative partner, Inclusiv, our collaborative partner, the Chamber of Commerce here in Tallahassee, our collaborative partner, the county, has really figured it out. Because sometimes you kind of say, well, I don't know what to do. I don't know where to go. Having the FAMU Federal Credit Union in the city being responsible enough to say, I'll take that lead, has been just phenomenal. I'd like to end with this, because what's very important is for people to realize we're a small business as well. And with that, we have to have secondary capital to help us to continue to grow, to continue to build capacity. We want to make sure that what we give to these communities, that we can support that not just for 1 year or 2 years. We want to support that over and over and over again. What we've discovered that small businesses stay in their communities. If they stay in their communities, that money circles back into their communities, which means they can provide jobs, which means they can provide scholarships, which means that we can, as an ecosystem, be part of each other to continue to grow. I'm of the opinion that Florida A&M Credit Union cannot grow and succeed as a small business if the businesses we support can't succeed. So I believe that secondary capital is going to be our next step to being able to supply the necessary tools and financial resources. And I love to say this, be that trusted financial institution that you can come in and feel like you can sit down and talk to us. I tell the businesses that we have right now, we've done almost $1 million in business loans since January. We're looking to get another $2 million from our partner here in the city of Tallahassee, because they've seen the value that FAMU Federal Credit Union has had. And I would be remiss if I didn't say that the board of directors for Florida A&M Federal Credit Union are phenomenal. They're influencers. They really understand that we are not going to be doing this on our own. And they've given me my marching papers to say, all right, you get out there, let's find out what's going on. And I'm very, very pleased that they have that vision. But I will end again with this and say that we know that the racial gap of wealth can be minimized if you give people, entrepreneurs, the opportunity to have access to capital. We did. If it wasn't for Inclusiv, we would not have had access to capital. We're so small. But just like we were given that access, our goal is to give back to our communities. And I want to thank Inclusiv for allowing us to do that. And I'm looking forward to how we can do more. Well, thank you so much.
Well, thank you so much, Sheilah, for really just sharing not only your story, but the story of many, as you call them, small credit unions. And, you know, I can't help but each time you were saying small, I just kept coming up with, uh, small, no, you're nimble.
No.
Small, no, you're relatable. Small, no, you're relevant. Because sometimes we could, in all of the largesse, we can get so big that we forget that mission. You said, I hate to say it. No, say it. It needs to be said because some, depending on where you're at, whether it's your assets or whether it's your mission, your focus, your strategies, have lost sight of that.
Yeah.
We are about people helping people. We are about an ecosystem that is what was just hit the mark. It is about creating sustainable communities, and recognizing that credit unions in most cases are the sole source.
Yes.
And the only place where someone can go and maintain their dignity and not lose their shirt or blouse in the process of simply trying to improve the quality of their life.
Absolutely.
Yeah, our members are just simply saying, give me a chance. And for credit unions like yours, like FAMU, to say, well, we want to give that chance, but we also need to collaborate with partners who are mission aligned.
Mm-hmm.
And, I believe that that's what we have, in Inclusiv and in FAMU. Mm-hmm. And I was just so delighted that we were able to advance the technical assistance grant to get you that necessary strategic planning. And as I shared earlier on, with the progressive process, I should say, for secondary capital,
Mm-hmm.
That strategic plan
Yes.
is absolutely critical before you can even begin that process. So the formulation of those strategies and those objectives into a written plan, a plan that now can be documented and followed, approved
Mm-hmm.
by your board. But the old adage is you write it down and you make it plain so that people can run with it.
Yes.
And that's what you've been able to do. And then even more important to that is then combining that with the financial projections technical assistance. Because with a strategic plan is phenomenal, but if you don't have the corresponding financial projections to actually make it measurable, qualitative is great, but quantitative is necessary.
Mm-hmm.
That's the direction that we were just so pleased to work with FAMU on. And we want to see that, you continue to reach these outcomes as you've laid out, the building the capacity and circulating the funds back into the local community, keeping that dollar right back in there because that's where we know it's going to be spent over and over again. So
absolutely.
Thank you so much for sharing that.
My pleasure.
So I want to pivot a bit and just share with you a little about the Inclusive Southern Equity Fund. It's a fund that's designed to promote economic mobility among low wealth and underserved communities, preserve and build diversity in community-owned and controlled financial services, and increase the impact of scalable institutions throughout the American South. This fund will make investments of up to $5 million in secondary capital loans to high-impact community development credit unions. Inclusiv is the first national lender of secondary capital and uses its resources to amplify the impact of its member CDCUs. Resource One is such a candidate for the Inclusive Southern Equity Fund. And Tracey, we've been on this journey for just a few months, but it feels like I've known you for a lot longer. And I'd like to get your insights on how the Inclusive Southern Equity Fund will be leveraged by Resource One in accomplishing your credit union's community impact objectives.
Oh, yes, sir. Thank you. Hello, everyone. I do want to say thank you to Ahmed and Kathy Kim, because Kathy brought this idea to us probably back in 2020. The idea of secondary capital, the Southern Equity Fund. And so before I go into telling you why we decided to apply for secondary capital, I will first introduce to you my credit union. So Resource One Credit Union, we are now $718 million in assets as of August 31st, and it's headquartered in Dallas, Texas. We have branches in Dallas County in Harris County, which is located in Houston. We are a community development financial institution, low income designated, and a minority depositor institution. In addition to that, we have the Juntos Amazamos designation. We have over 67,000 members, which you can see on the slide. And our membership is comprised of 42% Caucasian, 58% minorities, with the breakdown of 39% Hispanic, 12% African American, and 7% other. So as Ahmed was covering the details of the secondary capital, the two reasons we decided to apply for secondary capital is because, one, like he stated, it is a subordinate loan that counts towards your net worth. And like many, our net worth was hit, pretty decently, right? From all the stimulus that was received. The second reason, and perhaps the most important reason, is that this capital resource is limited to the low-income designated credit unions. And as a low-income designated credit union, we wanted to take advantage of this exclusive opportunity. We had a vision already in the works that would greatly benefit from the infusion of this capital. This vision would allow us to offer products and services to the underbanked and unbanked communities in our area, while continuing to spread the awareness of credit unions. Can you advance to the next slide, please? Thank you. And so according to the 2019 US Census Bureau population estimates, there was 643,857 foreign-born individuals residing in Dallas County. The US Census Bureau estimated that 453,712 of them were not US citizens. Another survey from FDIC estimates that 25.4% will remain in the vulnerable unbanked category. This information demonstrates the need for financial institutions to step in and provide the needed financial services. With our purpose being the improvement of financial security of the unbanked and underbanked, we partner with a local organization called Dallas Area Interfaith, which for short we call it DAI. So the Dallas Area Interfaith, DAI, was founded in 1992 and is a nonpartisan, multi-ethnic, multi-issue group of religious congregations, schools, and other nonprofits in the Dallas metropolitan area, with the membership in excess of 90,000 individuals. This organization helps within the community to identify issues of concern to all sectors of the community, as well as creating alliances across the lines of religion and ethnicity to develop a broad-based vision for the Dallas area. We can go to the next slide. And so what we found out while partnering with DAI is that there is an express need by this community for reliable and trustworthy banking services. They also brought to our attention that in this community, 1,500 Hispanic residents were screened for citizenship, which 40% of them did not complete the process due to a lack of funds. The process can cost up to $1,000, which has increased from the 2017 estimated cost of $700. At that time, more than 500,000 green card holding residents could qualify for citizenship in the Dallas-Fort Worth area. Now, this allowed us the opportunity to provide small dollar lending and create new products and services. The small dollar lending program is designed to be an affordable alternative to payday lending while also providing a path to citizenship. This product is designed to encourage savings and reward responsible borrowing habits. We also wanted to make mortgage lending available to the DAI community. So our mortgage lending program is structured to offer I-10 holders an opportunity to participate in home ownership. And lastly, our credit builder loan will assist in the goal of financial independence by building positive revolving credit. Now, with the help of DAI and secondary capital, we'll be able to create awareness and build trust within this community. After the initial introduction to our credit union, we plan to provide mobile banking where we meet them at a central location and open accounts and perform transactions. Once they grow more comfortable with us, we'll encourage new members to use the in-branch services and online features. We are prepared to communicate in Spanish and at every touch point within our organization, including the staffing with Spanish-speaking team members, as well as translating all of our marketing materials and loan documents. So with that being said, the use of secondary capital, the help of Inclusiv to get there will help us fund the DAI program and the loans that are needed to provide the Hispanic community with the financial independence they desire. So Ahmed, I'll turn it back to you.
Thank you so much, Tracey. The story that you're telling, it really represents the American dream that so many find out of reach, and unfortunately they're unable to go to a trusted resource in order to do that. You mentioned the I-10 holders, and again I go back to the trust factor. I think of the old banking term. Yes, I said the B word. Sorry, folks, but fiduciary, and fiduciary in its essence means trust. But when that trust, has not been established because that financial institution has not looked to understand the culture and the cultural differences, and would prefer to force people into a particular way of doing business. But hearing that Resource One is going out into the community to establish that, you're removing, those barriers, because, by and large, going into an institution with the brick and mortar can be overly intimidating. We on the Western Front take so much for granted that we have no problem going in and pulling on a door and someone saying, "Can I help you?" And we say, "Absolutely." And we probably have an attitude when we're doing it. And I look at that, especially when it comes to home ownership, as you mentioned, I-10s, which we're just so excited to hear about your plans on expanding home ownership, to that community. We're talking about where we on the Western side see home ownership as a right. And, applause goes up and everyone goes, yeah, yeah. But they see it as a privilege. It's not something that's taken lightly. If I-10s were the majority of those loans that happened back in the early 2000s, during the financial crisis, there would not have been a crisis because those mortgage loans would have been paid. That would have been the first thing that they took care of, because it's generational. So I can't say enough about really just appreciating that Resource One looked at a problem. You didn't fold your arms, but you said, what can we do about it? You didn't force them to assimilate completely and to conform. You said, what can we do to make ourselves more available, more accessible, more attractive? Am I hearing that correctly?
Absolutely. That's exactly, because having the conversation and just having the great team at DAI really sit down and talk with us, because they're in the community, they are a part of the community, and telling us what their needs are. And then being able to say, you know what, going to your branch is intimidating. Now, our staff, we have on staff probably about 47% is Hispanic. But going into a branch itself it just wasn't, they don't trust the banking system, period. And so having to make it more comfortable and coming up with having the mobile banking where we can go to them and set up shop and they can feel more comfortable because it's in their house, their neighborhood, right? So that they can feel much better.
Now, again, finding those tools, but more importantly, leveraging those tools, in the midst of a pandemic, of what's going on. And, not just simply just saying, we can't do it, or, maybe later. You didn't say later. You said, let's find a way now on how we can do it. So, I applaud, you, and your team members, and just being courageous enough to do it. Because it is easy to go and, and certainly not saying that this pandemic hasn't caused us to shift our business models, but to actually find a way, find another way. Wisdom is the ability to discover alternatives. So clearly, you are embarking on this, journey to find more and easier ways to reach them. But, it's not going to be a one size fits all. It's not going to be a simple solution that, every credit union is going to take. But I would like to hear, and even, Sheilah, from you as well, the importance of these community partnerships. I don't think enough is being said about that. And I think even some in our audience would like to hear, what was your approach to the community partnership? Because those, again, are the ones who have that relationship. They're the ones who have the boots on the ground. How did that actually come about, and how did that fit within your credit union strategies, for furthering your initiatives?
Thank you, Ahmed. So it's one of those things that you don't really think can happen. But when the board made the decision to help minority entrepreneurs, women entrepreneurs, we had to find how we can do that because we didn't know them in our field of membership. And so we started communicating with some of the associations in the city, NAACP, the Urban League, the Chamber of Commerce. And the fact that we got out of our building and had those communications really broadened the perspective of what the credit union can do. People don't come and ask you, hey, what can you do? Sometimes you just have to go out and tell them, this is what we can do. And so we were able to do that. And again, I know I'm kind of repeating myself, but the confidence to go out there when you have the strategic plan, the confidence to go out there when you have the financial projections to say, I can do this, gave us an opportunity to boldly state, oh, you've got $1 million, we'll take it. You want a micro lending program, we'll make it happen. And because we had that confidence, we were able to really collaborate without feeling that, there may be some pushback because we were small. Now we do have a complex about being small. I'll just put it out there. But we do feel like we're small and mighty. So we're gonna
thank you. I want Mighty Mike to show up someplace in this conversation.
Absolutely. And so with that boldness of having the opportunity to collaborate with our local leaders and some of our associations, they were our advocates. So now we went from 1 million at the end of last year. They already say, I've got 2 million for you in the next few weeks. So we know how important it is to just get out of the building, tell people that you are more than prepared, but that you want to do something to give back, that you want to be part of the ecosystem, that when you have the financial institution, the small businesses, when you have the school system, all of that goes together to making this a fantastic way of being American. I'm just going to put it that way, just put it in a broader sense. We're all Americans here trying to make a difference in each other's lives. That's what America was made for, made by, made because of. And so we know that with a little push, from Inclusiv, hey, come on, let's help you get started. It was amazing. And it gave us the confidence to have that collaborative spirit, if you will, to say, yes, we can.
Excellent, excellent. Tracey, can you just share again, when you were just talking about the Dallas, I'm sorry, it was it's the DAI?
Yes, DAI, Dallas Area Interfaith.
Dallas Area Interfaith. You know, I mean, when you had shared that, I was just like, you know, wow, you know, putting, you know, a faith-based organization, you know, there, that again, I'll go back to the boots on the ground, and being able to partner with them where you could see their reach. I mean, was that something, you know, kind of like the Reese's peanut butter cup, you know, accident where, you know, two people were walking and, you know, crashed together? Or was this something where there was a little bit more intentionality about this partnership?
Actually, so this partnership started to align way before I started. I came here May of 2020 in the middle of the pandemic, but Dallas Area Interfaith actually came to Resource One and asked them, could they partner with them? So really, they identified that they had a plethora of people who had an issue, right? The issue with citizenship. They want to have the American dream, as you so nicely put it. Everyone deserves to have that piece of the pie, right? And so they aligned with us to be able to do that. And ever since then, we have been working on creating the right loan products for them. You know, having a citizenship loan is huge, right? To be able to help them to be able to afford something that they hold so dear as a privilege that some of us some days kind of take for granted, right? And so as we've been working through it, because we actually launched the pilot back in October. But again, you know, learning, reinventing the wheel, straight, you know, kind of, you know, sharpening our edge as we went along. We are really working diligently to make sure that we're meeting the needs of that community. And once we finish getting Dallas together, their sister partners down in Houston would also like to be able to do that. So not only are we going to be able to touch Dallas, but also expand into Houston to also provide the same experience, the same financial independence desire for all folks in both areas.
It sounds like you're creating, dare I say, a model.
We're trying hard.
And that's what it should all be about, is, you know, modeling, you know, taking that time to, you know, we don't necessarily want as it would be, perfection to become the enemy of pretty good. So again, I also, I mean, just encouraged to hear that you have something, it's working, and you're looking at how you can actually take this and then bring it into other markets to make the to make similar, if not the same, impact. And that's again also interesting. And I think it's, you know, hearing that the Dallas Area Interfaith, you know, came to Resource One, you know, it shouldn't come as a surprise, because obviously your brand spoke those volumes that said, here's someone that we should partner with. You know, so I also encourage credit unions, you know, that are on the call, you know, to listen to your community partners or to would-be partners, because they're looking to you. They're looking for someone who would also have that same spirit of mission aligned, that vision, values, that they would look to, you know, embark on these particular initiatives with. It just doesn't happen. I don't believe anything just happens. I'm not one of those folks that you know, works under the oops principle. I believe that everything, you know, has some degree of intervention for it to occur. And as we were speaking about earlier, you know, so you're getting the secondary capital, you have these relationships, but secondary capital is debt. It's got to be paid back. So the leveraging side, you know, what were the concerns, or, you know, how were those concerns, you know, addressed when you were doing your financial projections or developing your community and business impact plan? And that's for either Tracey or Sheilah.
So for us, as we were going through and doing our projection plans, we really wanted to make sure that if we're going to go ahead and do it, though you had the first 5 years, the last 5 years you're paying back, we wanted to make sure that we were going to be able to put on enough loans to do it. And so in order to do that, we have been looking at our options. Like we're looking to enter into an agreement with a vendor called QCash to be able to help us make sure that the small dollar loans is expedient. I don't know how many of you have applied for the Apple credit card. I did it the other day. And when I tell you approval was that fast, it was that fast. And so that's what we're looking to do with QCash. So if you're in the middle of the night and you need funds, you're going to be able to do that through an app, through Resource One, to be able to get your small dollar loan within seconds and not having to worry if we have a loan officer on staff. And so having the innovation of adding those additional vendors and products to bring the ease and comfort to new members and existing members, we believe that having that additional capital will be able to do more loans with it.
That's awesome. Sheilah?
You know, we haven't gotten the secondary capital yet, but the Resilience Fund gave us, like I said, a jump start. It gave us a jump start to get in this business lending arena. And we've had to, you know, kind of get the fintechs of the world to come in and help us to make us sure we can get this out fast, because small businesses, this is their first introduction to the credit union. And we wanted to make that good impression. So we did partner with another fintech company to help us to get those applications online versus for them coming into the building. But I guess the biggest thing when we're talking about our credit union going towards secondary capital is we leveraged, I want to say 300% the amount of monies we had from the fund. And the opportunity to provide low interest rate business loan was our selling point. So we already now have this good feeling about we're doing it at a price point that is beneficial so that the members can pay these loans back, the credit union can make money, the economy is going to be stimulated, the communities are getting fulfilled. All of this is happening because we had the opportunity to get a little help. Secondary capital will give us that extended help to make sure that we can continue. Our loans topped out at $50,000. And I will tell you that we gave loans as low as $5,000 because sometimes people just need to get certifications. But the fact that there was that need so quickly, as I stated, we just got this money in December 31st, by the way, and it's all gone. So we're having to get infused again. Thank goodness the Office of Economic Vitality realized that we need to get more money out in the streets and that we have a trusted financial institution to do that for us. So here's another $2 million. And so that's kind of that layover, if you will, until we get into our secondary capital so we can really build capacity, plan out further, because I wasn't surprised that the $1 million went so fast. And it was a grant, so it really helped our credit union as well. But the thought of if and when, I'll say when, we get our secondary capital, then we can really plan for longer sustainability, not only for the credit union, but for these small businesses. So it has been phenomenal. And I'm just elated about having that pilot program to help us to know that we can go to something bigger.
That's awesome. You know, and I'm hearing it, and I'm saying, you know, capital. You know, it's the capacity. It's the collaboration.
Yeah.
With the community. You know,
Absolutely.
so all of those, you know, playing hand in hand with one another to this wonderful outlook of really going back. You know, again, I'm going to hold you on that one, of people helping people. And this has just been, just a fantastic, conversation. I just so appreciate, just speaking with both of you. I wanted to also just encourage our folks in the audience that if you do have any questions, to feel free to put them into the chat with the remaining time that we have. Also, to reach Inclusiv, if you have questions, if you're interested in learning more about secondary capital, I encourage you to reach out to me and the capital team. We are at your disposal. And the stories that you're hearing from Tracey and from Sheilah, these are not ones where we twisted their arms or said well, if you do this, then we're going to do that. One with Sheilah, that's not going to happen. Okay, because she'll tell you something, and I've learned a bit about that. But it's really just about hearing in earnest, from credit union leaders that specifically, how you can make a difference, how your credit union can look at taking secondary capital on in the furtherance of your objectives. It's debt, but it's good debt. It's debt that can be leveraged times and times over, from a position that if you did not have it, you might otherwise be reluctant to, because you wouldn't have that cushion, especially with the onslaught of deposits that still haven't gone out. They told us it was going to be gone in June. It's almost end of September, October. The deposits are still there. Sheilah, a quick question from Randy Lunsford. What is the asset size of FAMU, if you could share that?
We are around 30 million, only because we did about 10 million in PPP loans. So we may shrink a little bit. But another example of giving back to the community. We were initially going to do about $4 million, and we saw the need and went, forget that. We got 7 people. We're all going to work. We're going to give back to this small community, because as I tell the people with PPP loans, it's free money. So, and we did loans as small as $1,000 when it came to PPP. Nobody else was doing that. And my last thing about PPP, because I'm really excited about that too. The banks closed down on, I think, not closed down, but they couldn't get money on May 15th. Guess who they called? They called the engine that could. So we were able to just take their capacity.
Yes, I can.
Yeah. So I think we are confident now that people know that we will take it on and we will do what we need to do. But we're conscious of the fact that we're small business too, and things like secondary capital, understanding the debt, as you said, having some practice, if you will, to say, oh, well, wait a minute, we're making money with business lending. We can extend that. And so we're really happy that we had the opportunity to practice first. And now we're ready to take on that debt because we know the money we can make with that.
Excellent. Well, we want to thank you for joining us today. I want to thank our panelists, Sheilah Montgomery and Tracey Jackson, for sharing their experiences with Inclusiv and achieving their mission of strengthening communities through intentional credit union engagement.
Yeah.
If you have additional questions or would like more information, please avail yourself to the contact information provided on this presentation. We just look forward, to working with all of you in the future. Please remember to check out Inclusiv's exhibitor booths throughout the balance of the day, and remember to return for the closing general session featuring Senator Mark Warner. Take care, everyone, and stay well.
Good job, Ahmed. Good job.
Thank you, Sheilah.